A very good evening to you, Brian. How are you doing this evening?
Very well, thank you, Mother.
Okay, lovely to meet you, Brian, and it's an honor to be talking to you today about Indian fund managers and opportunities for them in Ireland. Okay, but before we get there, I'd like to introduce Brian. Okay, we'll have to edit a bit because there was a call coming. So, yeah, sorry, there was a call. Brian, how do I pronounce your surname?
Brian, yeah, Kelliher.
Kelliher.
Kelliher, yeah.
Kelliher. Brian Kelliher is a partner in the Asset Management and Investment Funds Department of Dillon Eustace, a leading Irish law firm with offices in Cayman, New York, and Tokyo. He specializes in the establishment of investment funds and investment firms and advises on all applicable regulatory and compliance matters. Brian has over 25 years' experience advising on the establishment of investment funds of all product types, including UCITS, with traditional or liquid alternative investment strategies, money market funds, ETFs, and AIFs investing in alternatives, less liquid, and even private assets. His investment funds practice covers product design, contract negotiation, authorization, distribution, migration, and advising on all applicable regulatory and compliance matters. Brian's international experience includes working in New York listed and NASDAQ registered broker dealer prior to commencing his career at Dillon Eustace. So, welcome to this chat today, Brian.
Thank you.
So, your experience and credentials within the fund setup arena are very, very impressive, Brian. Can you tell us a little bit about the specialized work done by Dillon Eustace LLP in the alternative space in Ireland and even globally for that matter?
Certainly. I think I'd start by saying Dillon Eustace has its headquartered in Dublin, but has offices in New York, Tokyo, and Cayman. And so it practices Irish law and also practices through its Cayman office, Cayman law. But of the number of practice areas that it focuses on, asset management and investment funds is one of the key areas. And we're recognized internationally as being very strong in that area. So in the context of asset management investment funds, we're a tier one firm by the international legal directories, such as Chambers, IFLR 1000, and we also represent the largest number of funds in Ireland. So there's a total of over 8,700 funds established in Ireland, like Irish domicile funds.
Wow, that's a large number.
Yes. So, and that's both for, UCITS structures, which focus on the liquid assets, but also private funds. And we represent close to 20% of those funds.
That's fantastic, Brian. So that was very interesting to hear. I couldn't have fathomed that there were 8,000 funds, in Ireland. And you manage more than 20% of those, right? You help set up. You
Yes.
help set up
Yes.
more than 20% of those.
And we now act for them on an ongoing basis.
All right. Okay.
Yeah.
That's fantastic to hear. I believe you have been visiting India for a number of years now. I think when we were chatting prior to this, you mentioned 2018 onwards is when you've been visiting India. So, any particular reason why India has sparked your interest? If you can talk a little bit more about the opportunities that you find here
Yeah, certainly. Thanks.
from your perspective.
Prior to 2018, a lot of the Indian managers using Ireland as a domicile were using their affiliated companies outside India, like Singapore and other jurisdictions. And it was not until 2018 that Indian managers really got interested to manage offshore funds themselves, as opposed to using affiliated companies. And I believe the reason for that was because changes to the Income Tax Act at the time, which was around the permanent establishment rules. So there was a flurry of interest in 2018, which resulted in three funds being established, three UCITS funds being established in 2018, 2019. And I realized that there was real interest by Indian managers in Europe in order to not just raise capital from European investors, but global investors. And UCITS are sold in over 90 countries worldwide. It's a global brand. And I suppose more importantly, it's almost akin to a 1940 fund, a US fund. So it has a lot of credibility. And I think they were really interested in giving global investors exposure to Indian public markets. And so I started to visit India, and you can be overwhelmed when you talk to Indian managers about their expectations of the Indian market and the strength of the market, and more importantly, the global demand for the Indian assets.
So we'll just cut here. Sorry, because my phone closed. So it's been really interesting to hear, about the interest of Indian fund managers in global jurisdictions and particularly Ireland. Uh, what are the so Indian fund managers do have a choice of multiple fund domiciles, right? So
Yeah.
we have the likes of Singapore, Mauritius, Luxembourg, and many others.
Yes.
So could you highlight a few clear uh, distinguishers, right, as to why an Indian fund manager would approach Ireland for a future business?
Well, there are a number of reasons. I think foremost, I think it's probably because they want access to the European markets,
Right.
retail professional investors, and that distinguishes them from some of the jurisdictions you mentioned, like Mauritius, India, and Gift City as well. Um, but then there's other reasons because Ireland is internationally recognised jurisdiction, and it has membership of various bodies like IOSCO, like the OECD, and more importantly, the EU, which allows them to have access to the European markets. Um, and I think, in addition to that, it's an English-speaking common law jurisdiction. It's the only one in the eurozone, and so that probably distinguishes it from Luxembourg. Um, and other reasons why they would look at Ireland is because of the extensive tax treaty, which I think Ireland has over 70 tax treaties, with countries worldwide, including India. In addition, the regulatory regime is very open and transparent, and importantly, there's a focus on investor protection.
That's a very important thing to
Yeah.
think about.
Yeah, absolutely, especially when you're focusing on not just retail investors, but this is important to institutional investors and wholesale markets as well. And I suppose the other I would mention another reason is the hub for cross-border distribution within the EU and globally. So funds are sold, regulated funds in Ireland are sold to, like I said, not only Europe, they're sold to the Americas, they're sold in Middle East, Asia, Pacific, Africa. So the global remit is quite broad. In terms of, I suppose, our experience, Ireland has been a leading fund centre for over 30 years. Now, Luxembourg has been in existence for longer. But I would differentiate from Luxembourg on the basis that while their assets under management might be higher as a jurisdiction, Ireland has the largest growth rate per annum in terms of assets under management. And the other distinguishing factor is probably the fact, as I mentioned, English-speaking common law jurisdiction. And so it's got a lot of similarities with India and probably a shared culture as well to a certain extent.
So I agree with you, right? When you're looking globally and you are entering uncharted territories, when I say uncharted territories, for the Indian managers, they're used to, they know the domestic scenario really, really, really well because over the years they have had experience of, how to operate within a domestic scenario. But when you're entering into a global market, the shared culture, I would say, really is a big advantage.
Yes.
Right, and it gives that comfort that one would look for, right, from the long-term perspective.
Mm-hmm.
Yeah. Now, coming to you mentioned that there are about 8,000
Yes.
funds,
Yes.
Registered in Ireland.
Yeah.
Could you give us a bit of statistics in terms of what is the interest there currently
Yeah.
for Indian managers who are already present there? So, how many Indian managers do you think broadly would be present there? And how quickly is this interest growing?
Sure. So of the 8,000, I think there's in excess of around 8,700 funds domiciled in Ireland. It's probably true to say the vast majority of those are on the UCITS side. Um, and I suppose that's the reason why Indian managers have focused on Ireland, because the UCITS, number one, because as I mentioned, it's a global brand, it's recognized internationally, and also it's an open-ended structure. It gives retail investors the option to redeem on a relatively frequent basis. And so it ties in and aligns with their public assets in the Indian market. And in terms of the other structures, there are 8 structures, and some Indian managers, I'm aware of 2 that used a quay structure in Ireland, which is an AIF sold to professional investors. They used that not because they wanted to invest in private assets, but it was because the investment diversification limits on the UCITS side were too stringent. And so they wanted to have a more, let's say, expansive portfolio, and they didn't want to be constrained by diversification rules. So they set up those quay structures. So it gives you an idea that UCITS, Indian managers have utilized both UCITS structures and quay structures. So there's and in terms of numbers, I would say to you, since 2008, when Indian managers came into the market, specifically themselves as opposed to their affiliated entities, the interest has been enormous, and there have been numerous that managers have set up. The biggest of those are probably UTI currently. DSP has a very big practice, and they have our fund, and they've set up in London as well. They set up an office. And then others that have set up there as well are White Oak, quite big, and Ask Capital. So, and the list goes on. So, and like I say, every year I visit India, I really get a sense more and more every year of the level of interest, and particularly on the UCITS structure because of the reputation and the global, I suppose, recognition.
That's really interesting. So thank you for sharing that. Do you think there are any clear tax advantages of setting up in Ireland for an Indian fund manager? And what are those?
Okay. So the non-Irish resident investors in an Irish regulated fund do not suffer any Irish tax on their investment. So whether it's a UK, whether it's a European investor, whether it's a Middle Eastern investor, they suffer no tax on their investment. And furthermore, there's no tax, a withholding tax on any payments to that investor. So that could be in the form of a dividend, could be in the form of a redemption payment. So they don't suffer any tax. So the only possibility of tax is the withholding taxes on the fund's investments. And that depends on the withholding tax, or whether there's a double taxation treaty or not between those, I suppose, the country, Ireland, and the country in which the fund's investments are based. And so on a positive note there, Ireland has a strong treaty with India. And so generally under that treaty, there are benefits, there are reduced withholding taxes on capital gains on most asset classes except equities. So there's no benefit on a capital gain on equity, but there is on other asset classes such as derivative instruments, such as debt instruments. And there's also a reduced withholding tax on interest payments coming from Indian listed securities and on dividend payments. So I think those rates compare relatively well from what I believe compared to other jurisdictions. So, and I think that's really helped and given comfort to Indian managers that, this is a structure that works, it's recognized globally, and from a tax perspective, there's benefits there. Plus, Ireland is a member of the OECD and therefore compliant with their standards. So, which is important again to international investors.
Absolutely. So, Brian, we were chatting before this earlier as well, and I was quite curious to understand what are the key challenges and obstacles that you face, or that Indian fund managers can face in this setup process? And what would your advice to them be when they're looking to set up in a global jurisdiction like Ireland. So how is it that you also help them to overcome these kind of obstacles within the setup process?
So I guess when Indian managers are interested in discussing with me the prospect of an Irish fund, generally the engagement is probably a long one, because they need to know and consider in detail, the benefits as well as the disadvantages, and what are the obstacles. And they need to get to know all the parties, the service providers. They need to do their own due diligence, get comfortable with the service providers. They need to look at their strategy as well and see, how distributable it is. And the other thing I find with Indian managers is they want to be able to understand, well, okay, I can sell the product throughout Europe, but how am I going to distribute it? So how am I going to bring in that capital that we vigorously seek?
Yeah, that's a common conundrum.
Yes.
For any asset manager.
Yes, and one of the biggest Indian managers, Kotak, mentioned to me during the week, the first 100 million is the hardest to make, and it's no different no matter what jurisdiction you're in. But the key is to ensure that you have a certain level of committed capital, and to ensure that you work on that strategy. And a lot of the time that depends on the existing relationships you have on the institutional side and on the wholesale side, whether that's be a family office or wealth management offices. And then it's to be able to build that scale, because once you get over a certain amount, it'll automatically attract other allocators. So it is a process, but being there is the start. So that authorization process is the start. And so that in itself can be pretty seamless in the context of, first thing, you need to select all your parties, service providers. And once that's done, the central bank, which is the regulator in Ireland, will look to approve the investment manager and approve the directors of the Irish fund. And once that's done, you just make an application to the central bank to have the fund approved. If the fund is being sold to retail investors, like a UCITS, or there are other AIF structures that can be sold to AIFs, to retail investors, then there is a process where the central bank will review the documentation, and that process can be more time consuming. So you're talking about, in terms of time frame, anything from 2 months from the time all the parties were selected by the Indian investment manager, specifically for a QAIF type structure, an AIF that's sold to professional investors, and therefore no central bank review, to an AIF or a UCITS that's sold to retail investors, where the timing takes a little bit longer. It could take up to about 4 months from the time the investment manager selects his service providers and the third-party management company, and so one needs to also bear in mind that once the fund is authorized, there's an FBI application, and there might be other applications as well in terms of the tax authorities in India. So these are all considerations. So it's important to know what they are to begin with, and to consider them in detail, and so that you're more armoured going forward to deal with these not necessarily obstacles, but the process.
Yeah, the process can be quite time consuming,
Yes.
and to understand the right steps at the right time becomes very crucial for anybody who's looking to set up.
Correct, yes.
Right, and that's where your expertise comes into play.
Yes.
Yeah. So great. I mean, these are great insights, and I'm sure our listeners today from various from the ecosystem of alternate funds and fund management in India will benefit a lot from today's insights, Brian. So thank you for sharing that. Are there any closing notes that you'd like to?
Yes. I suppose there's one thing I'd like to say, and that is that to date, the interest by Indian managers has been entirely on the public market side. But there's an opportunity for Indian managers on the private asset side to also use Ireland as a domicile. And that could be setting up AIF structures in Ireland, at the same time having the benefit of being able to sell those funds to professional investors. And in some cases, there's some products you can sell, to retail investors. And so there's a possibility to raise capital from European investors. And as I said, you can do it indirectly, or indirectly through perhaps another AIF structure that the Indian manager is managing. So there's lots of possibilities. So I would, I suppose what I would like to do is to just, I suppose, bring it to the attention of the Indian manager community that there are other opportunities in Ireland as a domicile in order that they can raise global capital by very much seizing this fantastic private asset, regime here in India.
I have a question for you. Quite curious to understand. So you mentioned 2 to 3 months typically. So post identifying your ecosystem partners, right, who will be partnering with you in the journey in Ireland, it takes about 2 to 3 months or around that time to set up, right? So are there any substance requirements that one needs to think about to set up? So do you need your physical presence there?
Yes.
And do you need a certain number of people who will be leading that operation from, with a physical presence in Ireland?
Yes. So it's a good question because I suppose it's the ecosystem that's chosen has the substance. Okay. So it's the, because there's huge responsibility from a statutory perspective or legislative perspective put on the fund management company in Ireland. So if that's in the context of UCITS, it's a UCITS management company. If it's an AIF, it's an EU authorised AIFM that's based in Ireland. And they're the ones that have the responsibility to ensure the fund complies with its legislative requirements. And so they're the ones that have the substance requirements. So when the investment manager is seeking to manage an Irish fund, there's no, the central bank doesn't regulate that entity. There's no substance requirements as such. From a central bank perspective or regulator perspective, they're focusing on the Irish fund management company who has the responsibility to oversee the investment manager in India and ensure their obligations are complied with. So in that sense, it's beneficial, in that sense. And it's probably more an outsourcing model that's utilised. Now, of course, if the Indian manager wanted to set up in Ireland, that is possible, but that's not been done to date.
All right, that's quite interesting. So the ecosystem is helping them navigate around the distribution, the fundraising, the compliance and regulatory requirements. All of that is taken care of by the local ecosystem or the local partners.
Yes. Probably not so much on the distribution side. I mean, yes, they can assist in terms of introductions, etc. And there's some managers that can maybe have within their own group have distributors within the EU. But ultimately, when it comes to distribution, there's an element of having to appoint a distributor in the local jurisdiction you're targeting in if you really want to be able to target that market. But in all other ways, yes, that substance is there in Ireland, particularly for ensuring compliance and with all regulations to which the fund is subject to.
This has been really insightful chatting with you, Brian. I think we all have learned a lot about, the various scenarios and the various aspects that Indian managers need to consider before setting up or before deciding on which jurisdiction to go with and how Ireland can be beneficial for them as a global jurisdiction to operate in. So thanks a lot. It's been a pleasure.
Thank you.